Good morning and welcome to this Moneycontrol live stream. You're watching Opening Bell with me, Nandita Khemka. Well, what a good morning it is for cricket fans, especially for RCB fans. 18 years, countless heartbreaks later, the dream finally came. It's real. RCB are the 2025 IPL champions. In fact, their maiden title, a moment fans have been waiting for nearly 2 decades. Jersey number 18 lifts the cup in the 18th edition, and it was, seems like, written in the stars. It was a roller coaster evening, full of ups and downs, but in the end, a brilliant bowling performance saw RCB lifting the cup. And an emotional Virat Kohli said in the post-match interview that he never imagined the day would come when Royal Challengers Bengaluru would finally win the IPL. But nevertheless, he has given his youth, his prime to this franchise, and yes, this is how it was really supposed to be all along. So RCB fans can finally say, "E Sala Cup Namdu." So yes, good news for Virat Kohli and RCB fans. Maiden title, and it was a long wait, but that's how it was supposed to be all along. And on that note, of course, for the market, although we've seen 3-day losses, yesterday we did end near the day's low. That's not something that we've been witnessing of late. We have seen the market staging good recovery in the second half. But yesterday we ended near the day's low. This morning the GIFT Nifty is fairly positive, but if you look at the Nifty in the pre-open session, it is hinting at another down day. But before moving any further and taking up all your stock related queries and talking about all the stocks that will be in focus, let's quickly take a look at the top stories at this hour. Wall Street posts back-to-back gains with the Dow ending higher by 200 points. The S&P 500 as well climbs aided by a technology rally led by Nvidia. Now, the chip giant's market cap surpasses that of Microsoft for the first time since January. Meanwhile, investors await Trump-Xi call, which is likely to take place later this week. Asian markets mirror Wall Street moves, opening on a positive note. The GIFT Nifty is indicating a higher start, but in the pre-open, we are seeing the Nifty trending lower. Oil prices remain steady following increasing OPEC plus output and lingering concerns over global economic outlook due to tariff tensions. Meanwhile, gold falls 1% after hitting a 4-week high, pressured by a firmer US dollar. It's raining block deals on the Lal Street. Sources say Jayanti Sinha is set to offload stake in Alkem Labs, while Flipkart is likely to sell its entire 6% stake in Aditya Birla Fashion. Indegene too may see a block deal with Carlyle as a likely seller. And the 3-day monetary policy meet of the RBI kicks off today with the decision being announced on Friday. The central bank is likely to cut repo rate by another 25 basis points in this meeting. Alright then, we failed to hold on to that 24,600 mark on the Nifty. The Nifty Bank, however, deserves mention. It hit a fresh high at open yesterday, but soon came under profit booking. In fact, Nifty Bank Index hit a fresh high of 56,160 or thereabouts. In terms of the broader end of the markets, we saw the mid-cap outperformance fizzling out. The market breadth was in favor of declines, and the mid-cap index, of course, ended the day lower by 0.5% or thereabouts. In terms of fund flows, foreign investors remain net sellers for a third straight day. In fact, they sold shares worth 2,800 crore rupees in the cash market. But on that note, let me bring on board our guest for today. Joining me is Nilesh Jain, Head Research Derivatives and Technical at Centrum Broking. Nilesh, great to have you on the show. We've been in a range between 24,500 to 25,000. Yesterday, we ended near the day's low. Do you see the possibility of that range being taken out today, especially on the downside, 24,500? Can that get violated today? And if yes, what would be the support level that you'll be watching out for next?
Hi, morning Nandita, morning to everyone. So yesterday we did see a crack where Nifty breaks below 24,600 mark, and the important supports are very much in place at 24,500. If you look at the derivative data of the weekly FN expiring tomorrow, The data suggests that 24,500 on the put side has meaningful OI concentration. And if Nifty breaks below the same decisively, then the next target would be 24,000. Because 24,000 is the 200-day moving average as well as 50-day moving average. Both are exactly placed at the same levels. But overall, looking at the yesterday's move, I think there could be possibility of a dead cat bounce or a small pullback before we see another leg on the lower side. So Nifty is trading in a broader range of 24,000 to 25,000. There's a thousand point trading range, but narrow range from intraday point of view could be 24,450 to 24,600. That could be the range. And since we have RBI monetary policy outcome tomorrow, so we are expecting market to remain volatile, specifically Bank Nifty, where we have seen a new record high yesterday. And the structure of the Bank Nifty looks more promising compared to the Nifty index. We are expecting Bank Nifty to inch towards 56,500 to 57,000 in the June series. I would buy the dip in the Bank Nifty if at all it falls in the range of 55,200 to 55,300. That can be a good entry point, keeping a stop loss below 55,000. And the upside target would be, immediate target would be 56,000 to 56,500.
Okay, that's the range to watch out for on both the Nifty and the Nifty Bank indices. But in the pre-open now, we have reversed course. In fact, the Nifty is hinting at a slight uptick. Let's see what really happens. We have 5 minutes to go for the markets to open. But since we're talking about banks, HDFC Bank will be in focus. SEBI has approved, its arm HDB Financial's 12,500 crore rupee IPO, and this IPO will comprise 2,500 crore worth of fresh issue and 10,000 crore rupee OFS by the parent HDFC Bank. Now, HDFC Bank owns almost 95% stake in HDB Financial, and HDB Financial as an upper layer NBFC is required to list by September 2025 as per RBI directive. Looking at the charts of HDFC Bank, has been sideways, so to say, but it has tried to make some bit of an up move from the second week of May. What are the levels to watch out for here?
In last couple of weeks, we have seen a bit of a consolidation. The counter is constantly facing resistance near about 1950. So if it breaks above 1950, it will be considered as a triangle formation breakout, and then the target would be somewhere around 2000 as well on the upside. So structure is looking positive, but the idea is to buy on dips, accumulate this particular stock from a positional perspective. And from a trading point of view, as mentioned, I would rather wait for a breakout above 1950, and then momentum can be seen towards 1980 to 2000. Stop loss for all the long positions should be placed below 1900. So structure wise, HDFC Bank, Axis Bank, and also ICICI Bank, all these three banks are looking strong on the chart.
Okay, all the three private sector banks looking good on the charts. But off late we've seen a flurry of block deals on Dalal Street. Today as well, there will be as many as 4 block deals, starting with Tata Technologies. Sources suggest that TPG Rise will be selling over 2% stake via block deal. The total block size is valued at somewhere around 630 crore rupees or thereabouts. Floor price for block deal at 744.5 rupees per share, which is at a 3% discount to yesterday's close price. Any thoughts on where Tata Tech is heading on the charts? Any patterns that you've been spotting, and how should one trade into this counter, especially in light of this block deal?
Nita, we did see a breakout in this particular stock from the levels of 730. So that was a breakout from its double top pattern on the daily time frame chart. Now it seems like it may revisit those breakout levels once again. So as of now, the immediate level to watch out for would be 730 to 740, 745. Those are the important support zone, and I think that can be a good entry point if at all it falls in that particular range. The immediate trend looks slightly on a negative side after yesterday's bearish candle that we have seen on a daily time frame chart. So fresh long position can be initiated only if it takes out 800 levels on the upside, and accumulation can be seen if at all it falls near about 730 to 740.
Okay, that's about Tata Tech, but let's talk about Indegene as well. There's going to be a block deal in the counter as well. Sources say that CA Dawn will be selling somewhere around 10% stake via block deal valued at approximately 1420 crore rupees. Floor price is at 580 rupees per share at a 6.5% discount to the current price. In the pre-open, of course, we are seeing the stock down 3.5%. In the last 1 month, it has shown some bit of traction, up almost 8%. At almost 600 levels, what should one do with this stock? Because the highs are in excess of 700 rupees. Do you see more room for an upside?
Absolutely. So if you see the counter got listed last year, so last 1 year, if you see the overall structure, the counter ran up to the levels of 725, 728 and formed a triple top kind of pattern on the upside. So overall, since those levels were not been able to take off this particular counter, we have seen a broader consolidation in the range of 500 to 725. That's the broader range. So looking at the recent up move in this particular stock from the lows, the counter has started moving in a higher top and higher bottom formation. So any dip from here can be used as a buying opportunity, keeping a stop loss below 580. 580 is the recent swing low this particular counter has formed. So ideally that should be the stop loss for the long position. And we can expect a gradual up move to continue towards 660 to 680 levels on the upside.
Okay, watch out for levels of 660 to 680 or thereabouts on the upside when it comes to Indegene. Just about 15 odd seconds to go for the markets to open. We are looking at a flattish open but with a positive bias. The GIFT Nifty, mind you, was up somewhere around 40 points or thereabouts. Global cues are looking fairly strong. US markets clocked in back-to-back gains yesterday on the S&P 500, and technology shares will be in focus after a good rally that we saw on stocks like Nvidia. It is a flattish start as was being expected. A 50-point uptick for our market as well. We are around that 24,600 mark. So managing to defend that 24,500 level today as well. So that's something that one should take heart from. The broader market outperformance that kind of fizzled out yesterday, today we are seeing traction coming back into the mid-cap end of the market. It is moving in tandem with the benchmarks, 0.2% higher for the Nifty mid-cap index. The Bank Nifty has also opened up with a green tick. Yesterday, mind you, it hit a fresh high of 56,100 or thereabouts, 160 or thereabouts, and came under a bout of profit taking. Today, it is trying to recover some lost ground. It's at 55,700 as we speak. It's a 100-point up move. Rate sensitive basket is in focus ahead of the RBI policy decision on Friday. The 3-day meeting, mind you, has kick-started today. So all these rate sensitives are in focus, especially the realty basket. It has been on an upswing over the last 2 sessions. Yesterday as well, in a weak market, we saw realty pack holding strong. And that was the top sectoral gainer. But today, let's see which of the sectors is taking the lead. As I mentioned, Nifty Bank in the green, but let's see what the other rate sensitives are doing. Autos, almost a 0.4% kind of a gain. You're seeing realty pack up 0.2%, so extending gains for a third straight session. But all the sectors are trading in the green as we speak. Even the IT pack, it's extremely flat, but it's trading with a mildly positive bias. But since we saw a rally in technology shares in the US market, technology pack was anyway supposed to be in focus today. So yes, all in all, a positive start. In terms of individual movers then, let's see which are the stocks that are gaining. Shriram Finance, that was a gainer yesterday as well, and today it's a top Nifty gainer. Bharti Airtel, Eternal, Dr. Reddy's, Tech Mahindra, Wipro, Hero MotoCorp, Bajaj Finserv. These are some of the other movers. Bajaj Finserv, mind you, was a laggard yesterday. It has staged some bit of a comeback. TCS is the top laggard on the index. Ultratech Cement, JSW Steel, ICICI Bank, Titan, Coal India, Bharat Electronics. These are some of the stocks that are witnessing some bit of selling pressure. But mind you, metal stocks will be in focus because higher tariffs, 50% tariffs on steel and aluminium imports from the US comes into effect from today, 4th of June. So yes, metal universe will be in focus as well. But looking at the open, Nilesh, what would you do with some of these metal names? Yesterday they were under pressure, and today, of course, the higher tariffs have kicked in. So, the likes of Tata Steel, Hindalco, how should you trade into these counters given the volatility?
Well, Nandita, this particular space has been in limelight amid tariff constraint that we are witnessing. A lot of volatility can be seen in this particular space. So first of all, it's an avoid from our side. Looking at the overall Nifty metal index structure, From the highs, we are witnessing some bit of selling pressure. Today also, it is making an attempt to turn positive, but I think a lot of consolidation can be seen in this particular space. So nothing concrete as of now coming in this particular space, but if at all we see any meaningful correction in the stocks like JSW Steel, JSPL, and also Steel Authority and Nalco, these are the couple of stocks which are on our radar, but not at current level. We are expecting some profit taking to continue from a short term perspective, but as of now, we are avoiding metals.
Okay, metals is an avoid. But let's take stock of the auto component makers as well. Especially the likes of Bharat Forge and RK Forgings. Given the fact that May Class 8 truck order data has come out, and North America Class 8 truck orders were up 40% on a month-on-month basis, although they're down 47% on a year-on-year basis. Uh, of course, Class 8 truck orders have gained momentum on a month-on-month basis for the first time in 6 months. That's good news for the likes of Bharat Forge and RK Forgings. Bharat Forge at the current juncture is extremely flat, not really reacting to this bit of news flow. But in the last 1 month, the stock has done well to clock in a rally of 14% or thereabouts. Uh, you know, are you looking at a trade here in Bharat Forge, or would you look at it more as a positional play?
See, it's a positional trade, of course, given the kind of rebound that we have seen in this particular stock. After hitting lows below 950, the counter has started moving in a higher top and higher bottom formation. So it is on the verge of a major breakout. The breakout level is placed at 1290. So a breakout above that will open further upside towards 1350 to 1400. But more sort of a gradual up move is something that we are expecting. So it's a positional buy. Buy with a stop loss below 1220. 1220 is the important support for this particular stock, and a gradual up move may take this counter towards 1350 to 1400.
Okay, gradual up move to 1350 to 1400 levels. But let's talk about Aditya Birla Fashion as well. The block deal in this counter that was supposed to happen has taken place. 6.2% equity has changed hands. Worth 617 crore rupees, and the trade took place at 81 rupees per share. The stock is down 8% as we speak taking the last 5-day returns to minus 9%. It's at 80 rupees or so. Any thoughts on where it could take support?
See, structure-wise, ABFRL is looking slightly on a weaker side. We have seen a lot of consolidation in this particular stock in the past. Almost from past 1.5 year, the counter is stuck in a very tight range and constantly facing resistance at the high level. So as of now, looks like it may test the levels of 77 to 76 on the lower side. 75 to 76 is an important support zone. I think from those levels, we may see a rebound coming in. But as of now, it's an avoid taking any sort of contra bet at present at current market price. We may see further downtick to continue.
Okay, chart structure looking weak. It could see more downside here on Aditya Birla Fashion. That's the call from Nilesh. Nilesh, let's shift focus to our viewer queries then. One pocket that was a high flyer yesterday was the entire fertilizer pack. We saw stocks rallying anywhere between 5 to 18%. There's a query that has come in on RCF after yesterday's move. What would you do with the stock? Would you look at booking profits?
Well, if somebody has already bought the fertilizer stock and riding the momentum, I think it's a good time to take out profit. If bought it from a purely from a trading perspective, because after yesterday's spurt, there could be possibility of some profit taking at the high levels. From a positional point of view, I think if somebody is looking to make an investment from let's say 4 to 6 months, I think these are the good bets to stay put. RCF, FACT, NFL, all these stocks are looking positive. But purely from a positional perspective, RCF has a potential to test 175 to 185, and stop loss should be placed below 152. So that should be the stop loss if somebody wants to stay put for next 4 to 6 months. But if bought it purely from a trading perspective, I think good time to book profit in the range of 164 to 165.
Okay, book profit, that's the call, around 164, 165. Hope that answers your query, Naveen. We have a couple of queries on Tata Tech and RK Forgings. We've already taken them up. You could just go back in the feed and check Nilesh's answer. But let's take a query on IOC. Nilesh Sabkale has written in, wants to know your thoughts on how the stock of IOC is placed. Crude prices have been fairly volatile. The Brent is steadying around $65 or so. But if you look at stocks of IOC or OMCs, so to say, they've flattened out, and in the last 1 month they've given negative returns. So at 140, is IOC a good candidate for a fresh entry? And if somebody is already holding the stock, what should they do with it?
Well, if you look at OMC space as a whole, we are witnessing more sort of a consolidation in this particular space, and IOC being one of the underperformer because we have seen a good momentum in HPCL, BPCL, but IOC has been a laggard. As of now, it is constantly facing resistance at its 200-day moving average as well as 21-day moving average. Both are placed exactly at 144 levels. So a breakout above 144 is needed for this particular counter to turn on a positive side, and then we may see a levels of 150 to 160 as well. But as of now, purely from a positional perspective, these are good levels to accumulate these stocks because we have seen in the past the counter has taken support in the zone of 130 to 135. So that's a good support zone for this particular stock. Not from a trading perspective, if bought it, then stay put, give some time. The stock has a very good dividend yield as well. From a positional perspective, a gradual up move can once again come, and 150 to 155 kind of levels can be seen.
Okay, that's the view on IOC. There's another person who wanted to know about IOC. That's Geetu Sandesh. Geetu, hope this addresses your query in some way. But let's take up a query then on Vedanta. I know we discussed metal pack, and your call is avoid. But if somebody is holding on to something like a Vedanta at an average price of 444.5, what should they do? Jaskaran Bajwa has a query on this particular stock, and he is holding the stock as well, making some bit of a loss. What should he do with his holding?
444 is not too far from current market price. There could be possibility of stock to witness some bit of a pullback towards those levels. So from a trading perspective, I think one can stay put if already bought, keep a stop loss below 425. 425 is the recent swing low that this particular counter has formed on Monday. So now stay put. We may see because see metals have been fairly volatile. In this volatility, you are witnessing both sides of move. As of now, today you see the Nifty Metal Index is making an attempt to witness a bit of a pullback. So in this pullback, the chances are very high that Vedanta may test the levels of 440 to 445. Those are the levels where one should exit.
Okay, that's the view on Vedanta. Hope that answers your query, and I hope you've taken note of the levels where you should be exiting. On that note, let's take up our next query. This one's coming in from Anunay Irinki. He has a query on PG Electroplast. He bought at 844 rupees a share. He wants to know whether he should average or exit and add a Cairn stack instead. What would your advice be?
See, first of all, PG Electroplast, this counter was in a secular uptrend, but since past couple of months, we have seen more sort of a selling pressure that has come in at the high levels near about 1000 to 1020 that has acted as a very strong resistance zone. But now, since we have already witnessed a gradual decline, after this decline, the counter has reached to its multi-month support zone and also 200-day exponential moving average, which also places 730 levels. So 730 should be the stop loss for the long position. Wait for some pullback. Pullback towards 800, 850 can be used as an exit opportunity. Now coming to Keynes, see both the stocks have a similar setup, and in both the stocks we have witnessed consolidation in past 4 to 5 months now. So there's no point shifting to Keynes as of now. Stay put with your existing long position in the PG Electroplast. I think there should be possibility of a pullback.
Okay, that's the view. I hope that answers your query, Anunay. Let's then shift focus to a query on Patel Engineering. This query is coming in from Vijay. He wants to know the future or the prospects of the stock, given the fact that he's pointed out that the company is winning new orders, but the stock price is really not moving up. Chartically, what is the pattern? The stock has been fairly sideways. And monthly basis, it has in fact given a negative return. But any patterns that you can identify on the charts of Patel, and what should one do?
In Patel Engineering, if you just pull up last 1.5 year chart, you can see the counter is moving sideways to negative, constantly trading in a falling channel. So structure-wise, positionally, the structure looks weak, and we may see further downtick to continue towards the levels of maybe 39, 35 kind of levels can be seen on the lower side. So structure is not looking promising. If at all you see any pullback towards 45, 50, use those pullback to exit. Purely from a trading perspective, I think there could be possibility of a further downtick to continue. And if somebody wants to stay put, then keep a stick stop loss below 36, because if it breaks below 36, then the target would be somewhere around 32 to 30.
Okay, that's the view on Patel Engineering. Hope you've taken note of the levels that Nilesh has just pointed out. But I think one last query. Then let me squeeze in quickly. Hemant Singh, the query has just come in. He wants to know your thoughts on Asian Paints, Nilesh. He purchased it at 2,400 rupees, and the current level he's pointing out is 2,250. So he is making some bit of a profit. I beg your pardon, he's making a loss here. Should he keep holding it, or how should he navigate?
See, from a short-term perspective, apart from OMC space, paint stocks are also witnessing consolidation as of now. So, from a trading perspective, there is still some more room left on the lower side. The stock may test the levels of 22,200 as well. So, if the view is to hold for 4 to 6 months, then stay put. Keep a trailing stop loss at 2175. The counter may turn positive gradually, and then we might see the levels of 2400 to 2500, but not from a trading short-term perspective, because short-term structure looks weak, and positionally the stock has a potential to test 2400 to 2500 maybe in next 4 to 6 months.
Okay, that's the view on Asian Paints. But with that, we've come to the end of the query segment. Before I let you go, Nilesh, your thoughts, your stock recommendations, in fact, for our viewers with a 1 to 2 day perspective, or for the next couple of weeks.
As you have pointed out at the beginning of the show, that rate sensitive stocks should be in focus, and that's the space where we are witnessing a bit of attraction in last couple of trading session. Banking, realty space, NBFC space. So this space where we have seen a good momentum, I think this momentum should continue. So within that space, within realty pack, prestige state is something looking attractive, although we have seen a good momentum. But if at all we see any dip towards 1570, 1560, that can be used as a buying opportunity. Keep a stop loss below 1540. The stock has a potential to test 1640 to 1650 on the upside. Apart from that, we have seen good momentum in defense pack. So defense is another sector, another basket that is looking attractive, and we are expecting this momentum to continue further. So within that space, counters like HAL, Cochin Shipyard, and also Majgaon Dock, all these three stocks are looking positive. Specifically, Cochin Shipyard looking strong for 2180 to 2200 levels on the upside, with a stop loss below 2100. Cochin Shipyard can be looked at. Apart from that, lastly, Paytm is another stock where we have seen a good breakout on Monday, and in last two sessions we are witnessing a follow-up more on the upside. So momentum can be seen towards 955 to 965, with a stop loss below 932. Paytm can also be bought.
Okay, those were all the recommendations coming in from Nilesh. With that, Nilesh, would like to thank you for taking out time and joining in as always. Always a pleasure chatting with you, and I look forward to interacting with you again next week sometime.
Thank you, Nandita.
Thank you. Thanks a lot. On that note, take a look at the market. We are trading with a positive bias under that 24,600 mark, but it's a good 30-point uptick in tandem with what the GIFT Nifty was really suggesting. The mid cap index is also cruising along just about 0.2% higher. The breadth is also in favor of gainers as we speak. 1480 advances to 850 declines, so almost 2:1. So looking pretty strong there. Let's see how things really pan out as we progress through the day. But the Nifty Bank Index has once again slipped into the red. But to understand how the fundamentals are stacked up, what to expect in the next couple of months when it comes to the market, let me bring on board Sandip Agarwal, fund manager at Sowilo Investment Managers. Great to have you on the show, Sandip. First of all, we've been spending a lot of time in this range between 24,500 to 25,000, and we've been here for a long time, right? What now earnings season is behind us. What, according to you, will be the next big trigger either on the upside or the downside? Because we are seeing, of course, news flow in terms of tariff as well, but we haven't seen a meaningful downside in the wake of that. So, in terms of tariffs, is all the bad news already priced in? And secondly, what would be the next big trigger?
Hi, good morning, and thanks for having me on the show. So, while you rightly pointed out the markets have been range bound, but I would say even if they are in range bound, it is a very good news because we have gone through so much of, news, and not so good ones. We have border issues with our neighbor. We also saw what is happening in Ukraine, Russia, and it is boiling. We have also seen Hamas, Israel not cooling off yet. And despite all this, and then tariff, so much of stance change on the tariffs. And despite that, if we are at, in a range bound also, I would count that as a positive thing. I think this market is ripe for a good move, provided, some of these things cool off. So I believe that, from fundamental perspective, fastest growing economy in the world, and that is there, that will be there for a longer term. A stable kind of currency, stable or falling inflation and better interest rates or possible cuts on there. So all this augurs extremely well for Indian markets, and I don't see any reason why we will not do well. Probably, some of these global issues have to settle down before the market makes a next up move. That is the way we look at it.
Okay, that's the way. But since you alluded to interest rate trajectory, we have the RBI rate decision coming out on Friday. The street is penciling in a 25 basis point rate cut. But is there an outside chance of a 50 basis point rate cut surprise, given the fact that inflation, of course, has been sub 4% levels? Would you expect anything of that sort? Because some of the economists, a few of them, have spoken of an outside chance of a 50 basis point rate cut as well.
So I personally believe there is a good chance of 50 basis point. The reason is that, generally we have seen that most of the time central bank try to upfront when they want to push the economy a little more. And I think, our economy probably will have more benefits if the cuts are front-ended. And secondly, also, we are not seeing any big risk on the inflation side because now more or less, there is a consensus view that crude will not surprise us on the upside in a big significant way, and also the food inflation is broadly in a range bound manner. I would not say that it is at the level where it should be, but it is not at the level where it is alarming. So I think based on that, probably RBI can take a bold call and go ahead with 50 basis point of cut also, because that triggers the economy in a much significant way. But these are some things which are speculative in nature. Very difficult to give a strong call on this, but I believe that there is a fair chance and a good chance of even 50 basis point cut.
All right, fair chance of a 50 basis point rate cut. In that light, which banks would you really look at? Would you look at private sector banks, PSU banks, and within this universe, would you look at large cap ones or mid cap ones? Which ones? Because if there is a larger quantum of a rate cut, margin pressure will be there, right? So in that sense, which are the banks that would actually look at that would actually merit a buy or merit a look at these a higher rate cut from RBI?
So the higher rate cut will give us a good opportunity to do more analysis, think little more. But because as you rightly mentioned that there will be pressure initially for a couple of quarters in the names, So the stocks are not going to run away in a hurry. But yes, from a longer term perspective, it will benefit because deposit rates will also cool off. So net it will be good for credit growth as well. But I think in a longer term only this will be more beneficial. And we have personally always have preference in our fund for private banks vis-a-vis public sector banks. So we continue with that bias of large private banks. And the reason is simple. We are not going to see for next 2-3 years at least any big negative surprise on the credit cost, particularly from the delinquencies or the NPA side. So I think that is a very big positive, and I believe that uh, after these 2 quarters, you will see a good move in the banking index as well. So we are broadly, positioning ourselves in that manner. While we know that in near term there could be pressure in NIMs, but in a longer term it will be highly beneficial. But that also gives us ample time to do more detailed work, think a lot, and see how the stocks move, and then buy something which falls within our philosophy of valuation comfort.
Fair enough. Sandip, you also mentioned the fact that you don't expect a lot of upside in crude prices here on. In that light, which are the crude-related themes you would be watching out for? OMCs is one. Would you also look at something like a paint, because that sector has its own set of challenges in terms of competition? So, in terms of crude-related themes, which one would you really be
So,
watching out for?
on crude related things, first of all, OMCs can become a structural story. That is the way we do look at that sector, because that is one sector which has not got re-rated. All other sectors, whether it is the PSU banks and or the defense stocks, they have their good run in last few years. This is the only sector which has not got re-rated at all, primarily because the dependency is on an external commodity, and also it is very inflation sensitive, and also sensitive to the pockets of the middle and lower middle class. So probably that is the reason this sector is something where people don't want to bet big and don't want to take big bets, big calls. But I believe that this is one sector which can structurally get re-rated, although it will take a lot of time, and we are also doing our part of work on that. On the proxies to play stable crude prices or falling crude prices, as you mentioned, there is paint, there is abrasive, there is resin, many industries are there. But the key challenge is that, these industries, as you already mentioned, that in paint, we have seen new players coming in, and whenever a challenger comes, it takes away market share, and there is a pricing war, and we have seen that in many industries. So I think the P multiple structurally starts going down, and that too in an industry where, growths are less than are high single digit in the best case scenario on a long-term basis. So there is a challenge. I think, paint industry is insanely expensive relative to the growth. So the PEG ratios don't justify them in a significant way. They are good defensive in the portfolio, good for, people whose borrowing cost or whose expected rate of return on equity is lower. But for India-centric investors or people who are raising money in India, I think the cost of equity or the expected rate of return is much higher. So this may not make sense on a structural basis.
Okay, a lot of questions I have, but we don't have too much time. But which are the sectors that you would be most bullish on at the current juncture? Domestic facing sectors or global facing sectors, of course, are witnessing challenges. Even autos, for that matter, especially after China's export curbs on rare earth magnets, a lot of challenges with respect to metals, autos, etc. So, if I had to ask you to handpick some of those domestic facing sectors that are looking the most attractive to you right now, with a medium term perspective, which ones would you pick?
So we have been extremely bullish on power and power ancillaries for last 4-5 years, and that bullishness continues. We are extremely bullish on the whole cycle of power, right from transformer, cable, wire, transmission, maintenance, supply, production, generation, everything. So we play across the board almost like the whole cycle. We are very bullish on the local capex, domestic capex industries, particularly the ancillary ones. Not the main ones, because the main capex, the multiples are insanely high, but the ancillary capex, those are very, very reasonably priced. We were very bullish on the EMS space and auto. Now with the stocks moving up insanely crazy, we have calmed down our optimism because of valuation. We are still very positive on the financial stocks, but not non-lending ones. So particularly the intermediaries, but we like that space a lot. But that space again even is becoming now a little unaffordable and expensive. We like some spaces of gold loans, some spaces of microfinance as well. So it is a pure bottom up, and the market will remain like this for next 2-3 years. The race in the market which you saw, the rise in the market which you saw between 2021-22 to 2024, I think that is behind, where everything does well. Now we are going to be in a market where you have to do bottom up and you have to be very selective, and it will be earning driven market. So we like pipe industry, we like the power industry, we like the domestic capex, ancillary capex. All these industries we like a lot, and we do a lot of bottom up work there, and we try to buy things for long term.
All right, point taken, Sandeep. Thank you for taking out time and sharing your perspective with us. Look forward to another chat sometime soon.
Thank you so much.
Thank you. Well, that was Sandeep with his thoughts on where the markets are headed and which are the sectors to really watch out for at the current juncture. But if you look at the market, we have fizzled out even further. In fact, the mid-cap index has now slipped into the red. The Nifty just about clutching on to that positive territory, 24,550. We are trying to defend that level. Let's see how things really pan out, because for now it's not looking all that great. And the advance decline ratio is even Stevens. Earlier it was tilted in favor of gainers, but now it's even Stevens, almost 1:1. So yes, things are reversing. But let's see how things really pan out as we progress through the day. But with that, completely timed out on opening bell. Thanks a lot for tuning in. Of course, we'll be back with closing bell at 3:30 p.m. So don't forget to tune in for that. Till then, stay tuned to Money Control for all your other news and updates, and have a great trading day.